Welcome back. Well, today has been a great day for the bulls. No two ways about that. We will close at the highest point of trade and led by two important segments of the market. One of them is banks and the other one is consumption. Varun Goel joins into our discussion and we have a panel of other experts to take us through the last 10 minutes. Gentlemen, thanks for staying on. Varun, the consumption space has seen a firm rebound in the last couple of days, whether cement, paints or even autos. Is this a place that you're bullish on now, or do you think that there could be some more pain to go?
Well, our sense is that most of the consumption-related stories are going to see 5 to 10% cut in earnings growth for FY17, and maybe to the extent of 3 to 5% for FY18. So definitely there has to be a re-rating downwards. As far as FMCG companies are concerned, we believe that some companies are still trading at relatively premium valuations as compared to the broader market, and there is scope for still compression in PE multiples there. As far as auto companies are concerned, I think one has to go selective. We don't see a big impact on the premium motorcycle segment and the four-wheeler segment. In the two-wheeler segment, of course, there is a clear signs of slowdown. The sales are down 20 to 50% from what we gather from our conversations with various dealers. And to that extent, December quarter earnings and maybe even March quarter earnings might get impacted. So one, of course, has to wait and see as to what the correct picture will be. But our sense is 5 to 10% earnings downgrade will definitely happen.
Okay, the stock of the last few minutes is actually Page Industries. Pull out the intraday chart. Again, same story playing out. Consumption theme getting beaten back in blue, and look at that. It's in a matter of 2 or 3 minutes that we have seen this kind of rally. Varun, good afternoon. What about large private sector banks, ICICI, IndusInd, HDFC Bank? How would you approach them now?
Well, I think we would remain quite constructive on the private sector banking space. I think we would expect a rate cut on 7th, and probably in the next 12 to 18 months there is scope for significant amount of rate cuts, considering the fact that inflation is expected to come down. Second, in terms of asset quality, we believe we have seen the worst, and probably the asset quality is going to get better. I think even on the corporate loan side, things might turn a little more positive going forward as compared to what we have seen so far. We of course continue to bet heavily on the housing finance space, where we believe the space will remain largely unaffected, especially those players which are largely focused on the mortgage segment, and we believe that BFSI space as a whole should continue to do well.
Okay, well, cement stocks are really surging now. Just pull up JK Lakshmi Cement. That stock is up 10%, and although the volumes are not very high, the price action is phenomenal on JK Lakshmi Cement at the high point currently. And you have others in the same space like Ramco Cements that's up almost about 6-7% as well. Mr. Tulsian, we've discussed this space at length, but before we close for the day, I just wanted to ask you, any of these broader market cement stocks that are worth buying now? Heidelberg, Shree Cement, they've been great wealth creators in the past, and now post the slump, anything you like?
Maybe amongst the larger space, I like Ultratech Cement, but if you go for the mid-size cement, this I said in the morning also that I am keeping my positive stance on the cement stocks, and the company is having capacity of 80-90 million with Ultratech. Obviously that will be the prime, that will be the first choice. But amongst the middle one, those who have the capacity between 8 million ton to 25 million ton, I have 4 stocks in my mind. 2 from south, one is Ramco Cement, second India Cement, and 2 from the central region, or maybe you can say that one also from the southern region, that is Kesoram, having a capacity of 7.5 million ton, having presence in Karnataka and Andhra. And then 4th one is a Century Textile, again having a capacity of 14.5 million ton, having a huge presence in the western and central part of India. So these are the 4 stocks in the mid-size capacity, and Ultratech amongst the larger capacity.
Okay, we just have a minute to go, and it's been a great day for the bulls. In fact, a couple of good days is what the bulls have seen. So you can perhaps firmly say that at least that Brexit day low of 79.50 holds. We've now reached the upper end of the trading range as well. 8200 is crossed today. So you get a sense that it's only up and away from here.
I think don't even talk about Brexit day lows now. That's what the bulls would say, Sonia. But yeah, I think the market has made a bottom there near term and has moved on. The big question is, has the bottom moved up to say 8150 thereabout? That I think the test will be tomorrow. But more importantly, the Bank Nifty rallied today. I think the significance of that should not be lost. 2% rally in the Bank Nifty, that's ready to put behind the underperformance. And let's talk about the stocks that led the markets today. Really, when ICICI Bank moves, the market moves, and that's what happened today. 4% rally in ICICI. Yes Bank, State Bank were a couple of other big winners today. Maruti was up 3.5%. Phenomenal move in Maruti. Eicher Motors up 2% as well. Cement stocks led by Ambuja, Ultratech, ACC were all higher in trade. Then of course you had other big winners like Bank of Baroda, HDFC Bank, TCS. So all in all, a really strong day. The only notable loser today were Idea Cellular and Lupin, but it was a day to talk about winners. Mid-cap index, did well actually. It outperformed the Nifty in the sense it's just that the Bank Nifty took on us, so we're not talking too much about the Bank Nifty, about the mid-cap index today.
Oh yes, but you know there were plenty of buying opportunities in the mid-cap index as well, and the good part is a lot of non-index large caps surged today. So take a look at this. JK Lakshmi Cement up about 10%. Talking about the cement space, you had a lot of others like Ramco Cements that rallied almost about 4-5%. You had tire stocks like JK Tires, Apollo Tires all rallying. JK Tires ending in the green by almost about 4%. Some of the other, non-index large caps like Page Industries rallying about 4.5 to 5%. Shilpa Medicare has been a big, a stock that has been rising quite a bit over the last many days. That stock rose almost about 5% in additional today. Motilal Oswal up almost 8%. Wellspin India, Wellspin Corp up about 8 to 12%. And Whirlpool from the white goods space up almost about 6%. It had a couple of other names like Blue Dart, Crompton Greaves, etc. for company. Sundaram Finance from NBFCs up about 5.5%. So looks like the bulls are back in full force. We end the day above the 8200 mark. More importantly, that 200-day moving average of 8150 has been conquered effectively, and the Bank Nifty was clearly the star of the day. Varun, any fresh commitments that one should make in the banking space now? And if yes, would it still be in some of the more bankable private sector names like IndusInd, Yes, etc., or are you looking at SBI as well?
Well, I know our sense is that this whole demonetization thing hasn't really changed the investment hypothesis, I know, for some of our key positions. Our sense, of course, that the housing finance companies will continue to do well. Some of the private sector banks which have good clean corporate governance, good balance sheets, were focused on retail side, continue to do well. Incrementally, we believe that even the worst on the corporate side is over, so they might also begin to do well. I think, yes, going forward, even the public sector banks might benefit disproportionately from the bond portfolio gains, and to that extent, they might have seen the worst in terms of valuation. Although the broader value migration story from public sector to private sector continues to play out, but selectively there might be opportunities even in the public sector space.
Okay, Ashwini might be getting ahead of time, but is it time to look at higher levels again, the likes of 8600, 8700 on the Nifty in the December series or January series?
I would think so. Given the kind of smashing the market has taken, I don't think any weak hands would be left, and that's what corrections are about. The weak hands get kicked out, and finally, while the news is still bad, the market keeps on moving higher, and when the good news starts coming, we are closer to the highs than to the lows. So clearly last I think 4 or 5 sessions have been up, so that just tells you which way the momentum is and what is the view the market is taking. So all kinds of corrections should encourage people to buy. I think banks are also now back, and you could do next 200 250 points on the Nifty fairly quickly, because now it has one more leg, which is the strongest leg, contributing.
Okay, gentlemen, on that optimistic note, we'll let all of you go. Thanks for joining us. It's been a great day for the bulls today, and we've continued the move upwards, leaving behind that Brexit day low and also getting past the 200-day moving average. So great day for the bulls. But our closing bell money control question of the day is, Aberdeen says the fall